All right, everybody, Bryce here, coming at you with another real quick crypto market update. And I just wanted to start out with what I'm seeing. Guys, I'm seeing a very, very short-term retest of support come in. Meaning I think, Bitcoin, Ethereum, they have room to breathe, maybe 4 to 8% lower, where Ethereum would then hit its 200-day moving average, Bitcoin would hit its 200-day moving average, where I think we're going to see a lot of demand step in. Because remember, the long term for this entire ecosystem is as bright as it's ever been. We have the Bitcoin ETF on the horizon. We've got incredible building going on throughout this bear market. We've got the Bitcoin halving coming up just 9 months away. BlackRock, Fidelity, these guys are staking their name on Bitcoin. And by proxy, a lot of these other cryptocurrencies are growing. A lot of attention, a lot of adoption. So this is really good. But in the short term, we did see a little bit of turbulence over the weekend. I don't know if any of you guys were paying attention. There was a little hack that happened on the Curve blockchain or the Curve platform. And so that's caused a little bit of FUD in the market as people are selling, and there's a little bit of liquidation cascades going on in DeFi. So while I do think that is contained, I don't think it's going to be a systemic black swan event or anything that's going to knock things down. I do think it will be able to, grab prices down a little bit lower. And, I've mentioned that 200-day moving average on Ethereum and Bitcoin, which is, for Ethereum, the 200-day moving average about 4% lower. On Bitcoin, it's about 8% lower. So I do think there's room to breathe in the market, which just means you don't have to go all in right now. You could, slowly enter the market over this next week as this leverage starts to get expunged from the market. I also think there's going to be a couple other volatility causing events where I think you'll be able to get a good buy zone. Again, about 4 to 8% lower for this week going forward on some of the big caps. And that's the jobs report. Now, remember, the jobs report comes to bear on inflation, right? And it comes to bear, and inflation comes to bear on what interest rates are going to be doing at the Fed and also all the other central banks, which we'll get to. And what's really important to understand is that these jobs numbers are affecting interest rates, and by proxy, paying attention to them is going to show you when the markets are moving. So again, there's like 3 different jobs reports tomorrow, the day after, the day after. And so you're going to see volatility. Now, since the market is losing a little bit of that daily short-term momentum, and you're able to, potentially pick up a good buy, again, right at the 200-day moving average, again, 4 to 8% lower. So not much before I think we break back above $30,000 on Bitcoin and $2,000 on Ethereum. I think that's coming in the near term. There's also something interesting that kind of knocked markets down in the short term, and it was some Fed speak out of the Bank of Japan, whereby the governors of the Bank of Japan were saying, hey, maybe we are going to raise our interest rates a little bit. Now, that would be detrimental to the overall global liquidity if the Bank of Japan, which is currently the world's cheapest source of money, as it is pretty low interest rates. They've got their whole bond buying program. They've got quantitative easing. They've got yield curve control. They run the whole gambit over there. Okay, and what's occurring now is when they said they might soften some of that quantitative easing, we saw markets really kind of start to turn over and freak out. Which isn't good. It means they might suck some liquidity out of the ecosystem to tamper down what might be inflation in Japan. And so that's another interesting factor. But again, right after that announcement, the markets freaked out. The Bank of Japan announced an emergency bond buying program to counteract that effect. So we did see that risk mitigated, but it's something I'm keeping my eyes on. I'm going to be reporting back to you guys. The other thing that's going on that's big right now is it's earnings season. 25% of the S&P, 25% of the companies, the S&P 500, are reporting earnings this week. So that's going to cause a lot of volatility. Why I think we could get a better deal by about 4 to 8% on Bitcoin, on Ethereum, just a little touch lower before we get higher. And again, there's a lot of good things in the long term, which make me think that any dip that we might see here this week is a buy the dip moment, okay, guys? Because I think, again, with the floor price of Bitcoin going to $40,000 per coin, the cost of production at the point of the halving, which is just 9 months away, I think that spells a very bullish future for what is going on in the longer term. So this is important, guys. I hope you enjoyed this market update. I hope that it gives you the confidence to do what's right in your portfolio. And with that being said, guys, take care. And if you also haven't subscribed to a service where you could get market updates, where you could get newsletters, buy zones, sell zones, model portfolios of the coins we hold in our portfolio, the coins that we do fundamental and technical analysis on. And if you want all that, well then guess what? You could sign up. For $1, you could get a 2-week trial. You could come and see behind the scenes everything that we do here at Crypt Nation. Come take a look. Join us for some calls and watch some videos and see what you get out of it. Again, $1 2-week trial. Hit that button below, and we'll see you inside. I'm sure you're gonna love it.